From breakthrough devices to the bottom line, we explore the investment trends, the commercial models, and the strategic thinking required to bring neurotechnology to the global market. This is the Business of Neurotech. Hello, everybody, and welcome to the show. I'm your host, Adam Fraser. And today I'm joined by Richard Mulry, who is President and CEO of Northwell Holdings, the for-profit arm of Northwell Health, which is the largest health system in the Northeast. Richard has over 30 years of experience in healthcare, including management and growth of large enterprises at Northwell and other AMCs. He now leads Northwell's innovation portfolio. Richard, lots to talk about. Welcome to the show.
Adam, thanks so much. It's really great to be here. Looking forward to it.
Yeah, look, we're a broad church on the Business of Neurotech podcast. Fantastic to get someone not only from the investor side, but inside the tent, inside a very significant medical chain of hospitals in the Northeast. So really looking forward to how you view the investment world, the neurotech world, and a slightly different perspective maybe to an investor that sits in Silicon Valley. So look, let's get into it, Richard. You've had a very interesting route, as many guests that kind of meander into this space over their career. You had some consulting. You've been very much on the operational side inside clinical settings. But yeah, tell people about your journey and how you ultimately ended up in your current role.
Sure. Well, it's been a rather non-linear path, to say the least. But I'm grateful for the perspective that it's really provided. So, as you said, over 30 years, I had with the stop in consulting. I've mostly spent my career inside large health systems and at the enterprise level. Early on, I got to wear many different hats. I was an open heart surgical tech. I worked in clinical research. After grad school, spent the bulk of my career really in finance and operations. This is my second tour of duty at Northwell. Early on, early 2000s, it was called the faculty practice. Now it's our medical group. Really working on the front end of finance and operations across. And we were at the stage at that time of really having two chairs for every single service line and really taking them and merging them into one. So very exciting time. But when I came back in 2015, the CEO and the COO asked me to drive growth across a couple of service lines that were key parts of the organization. Fortunately, neurology and neurosurgery were two of them. So I really was lucky enough to work with some amazing leaders who were very innovative, doing really wonderful things. Once we started to see some progress within the service lines, ventures emerged as the next really big growth opportunity. So I shifted into building out that portfolio with more of a strategic and financial lens. But really the reason I was asked to go in there is that we had a magnificent deal team writing wonderful term sheets and executing great transactions. No one had worked in healthcare. So we're valuable to these companies. This is a true partnership. It's being able to launch, scale the company. So having someone with a background in healthcare operations was really a wonderful addition to the team. And I think it helped us and strengthened us being able to be a better partner and making the investments that we made more successful. And so now 5 years, later, we're investor, partner, not just customer. And we've had a really, I think, an interesting experience over the last several years.
Yeah, that's great. We'll get into Northwell, your philosophy on investing, deals you've done in neurotech, obviously. But yeah, many people in Silicon Valley, and, people have different paths, maybe take a more traditional, finance, accounting, corporate finance, deal doing, the pure kind of investing capital side of things. You've obviously got the clinical coalface experience of working in a health system. I'm guessing fast forward, that's helped make you a better investor because you've got maybe a more pragmatic, realistic view of what it takes to drive change in that environment.
Mm-hmm. Yeah, it's actually given me what I just call the gut instinct in terms of just being able to sit down with a company and have a feel for whether or not this is something we think could be successful within the walls of the organization. And that's the only reason that we would move forward. But yeah, venture investing and medical and hospital management are very different. It's great to be at the intersection of both because they're using different muscles.
Absolutely. Absolutely. So look, just give people a bit more background on Northwell Holdings, the group, how big you are. Yeah.
Sure.
The settings as a whole.
Yeah, we're a relatively lean team, but we're the venture building arm for the health system. So our mission, we're dedicated to driving diversified margin back to the system so we can continue to reinvest and continue to grow and be innovative. So we achieve that through strategic deployment of capital. And so we focus on solutions that have drive like impactful change, I think, with how care is delivered, how the system operates. Is it aligned with our mission? And part of what the holdings philosophy is that we are truly a design partner. We're the proof of concept. We're the scaled reference customer for the companies with whom we work. So rarely would we ever want to invest in a company that we would not use. But as we've evolved and grown, we realize there's still space in the market, or there's still gaps where we need continued solution. We didn't see a market need, something in the market that actually met those needs. So we've embarked upon launching our own companies, and we've done some entirely on our own and some in conjunction with, for example, Aegis Ventures is a company creation studio in New York. The reason I think we started to do that is holdings, although I think we have a magnificent team that their skill set and competencies span across, the clinical management consulting, in terms of data and data engineering. We're really, as overall as a health system, historically trying to launch a company with complete internal skill sets and competencies was never really enough. So having a great partner that brought the ability to bring infrastructure, market intelligence, fundraising aptitude to a deal where we then, as the partner, could bring our expertise and know-how, the data to inform our decision making. So as a group, we're really a great connector within the system for when we are able to get a lot of deal flow coming in. And we have an extended network across the health system that really helps us. So that's a key part of what our team does, is really touches every part of the organization and tries to know what the gaps are. So when we see it in the market, it's something that we can bring to their attention, even though we have a lot of things, that are presented to us anyway.
Great. And the size of the Northwell hospital presence, whether it's number of beds or number of employees, just to give people a sense of the scale of Northwell Group?
Sure. I think we're up to 27 hospitals, over around 1,000 ambulatory sites, and we have 107,000 employees. And so it's the largest. We've made a foray into both, Pennsylvania and Connecticut, but we're the largest private employer within New York.
Wow. Okay. So talk a bit, you started to touch there, Richard, on obviously there has to be an angle for Northwell itself, to leverage almost as the proof of concept customer, the reference customer. Talk about your funnel, because I know from public data, you get thousands of inquiries like many VCs and investors. You probably look at a few hundred and then maybe you invest in a couple of those. So it's quite a difficult funnel to get through. Talk about that investment process.
Yeah, it really is part of what we've been able to do. As we're out, we have lots of colleagues. We have great relationships with many of the venture capital firms, private equity firms, and then consortium of other health systems. And that we built one intentionally alongside Aegis Ventures that's really allowed us to start to share opportunities and also share diligence related to some of these companies. But we get about 2,000 inquiries a year. And so, in fact, we had to build our own AI platform just to do the first pass review to make sure that it hit all the key pieces. So what the analysts used to have to do and spend a good, a few days doing, unmet need, the competitive landscape, high potential to commercialize, the management team, for example, collecting all that data and then having it just dropped into our template gave us a sense of whether or not we even would bring it to the next step in diligence. And so as we go forward and look at those, our diligence is tiered and with successive gates. And so not dissimilar probably from what a venture capital firm does, but we'll listen to an initial pitch and just to see if it has all those elements that I mentioned, with special note to really trying to understand the passion behind what the company's trying to do, the experience, and the emotional tenor, quite frankly, of the team and the founder/CEO. That's really important as we continue to weigh the factors of whether or not an investment would be good. If it seems it's past those first two hurdles, we bring in our subject matter experts. So we work with over 400 doctors across all service lines, all specialties, that spend their time really assisting us evaluating these companies. So they'll go in and say, have I seen this before? I've seen it come along since it was very, very early stage or conceptually. I know who the doctors are that are helping support the company. They're familiar with a lot of the literature. So they'll tell us if it looks like it's something that we want to invest in or we want to pursue or take the next step, which would be delving into a data room, looking at the projections, a deeper level of analysis, and looking at the return profile. And then the last piece that we would really before we make sure we wanted to do an investment is look across the organization at all of the key stakeholders that are necessary for this to work. And so there's lots of alignment that has to be in place. And it has to work not only for a financial driver, it has to work operationally, integrate, and we need the clinical side of the house all bought in. And then, quite frankly, the adopters of these products have to be able to live with a little bit of uncertainty and a little bit of disruption to their current state. So we try to make it as seamless as possible for workflow. We try to minimize the risk. And then sometimes something as simple in a health system is that I love this product. I would love to do it. I don't have the budget for it. And so, we can't wait for the next budget cycle. So we've been able to kind of work with the senior leadership to try to get that hurdle taken out of our way, at least for a pilot. We don't like to use the word pilot. We say early launch because it just emotionally gives it a better vibe. But what we try to do is just take that away and have the pilot not really live on the budget for the respective service lines that are being our partner. We write an investment memo, go through the same rigor to defend it, and then we're granted the capital. Everything we invest is off balance sheet, though. We're not working from a fund.
Right. First thing, did I just hear you use the word simple and health system in the same sentence? Surely not.
Did I?
Nothing is simple in driving change in medtech.
No, not at all.
It's a great summary, and pick a percentage. Probably 70 to 80% of your process sounds broadly similar to the way Sequoia and Andreessen and General Catalyst and all VCs would work. I'm interested in just pulling on the thread about if you saw an investment that you thought commercially stacked up in its own merits and generated the IRR necessary and you really felt good about it, but it didn't have a particularly strong Northwell synergy. Is that a deal breaker for you? Is the Northwell requirement kind of in your hierarchy the number one thing you have to look for?
It really is. If it doesn't pass that hurdle, it's a no-go.
Right.
Again, we feel our role is to be a partner in the adoption and scaling of that solution. And we have such limited capital to invest in relative terms that we want to make sure that those are the types of companies that we can be fully behind. And the use of our logo really means that they have not only our endorsement, they have our feedback. We're giving them as much information as we can about their market fit and any modifications. And sometimes, depending on the level of investment, we can sit on the board and also from either a market penetration or a clinical expert opinion, continue to have the company progress and move forward with our input at that level as well.
Yeah. You touched on a couple of times, Richard, you obviously open to partnering with the broader investment community, the VCs. Do you see yourself as competing in that ecosystem, or you just feel like you're a part of the broad group that can fund capital into this space?
Yeah, we consider ourselves part of the same ecosystem. There may be opportunities sometimes where a certain firm will come in and lead and want to take an entire round. We've always been able to work that out, but we really enjoy investing along good VCs. They bring an expertise and ability to scale for the company, and we feel like we fill out the other end of the scorecard. So we're really de-risking the investment too by partnering with the company and trying to take it forward for all the reasons that I mentioned. And so we have really great relationships with the venture capital firms that we've co-invested with historically. And so we plan to continue that type of arrangement.
I mean, it's interesting to think through in a perfect market. Northwell brings something that a pure capital provider doesn't. So yeah, you could theorize that I could take, I'll make up some numbers, 10 million at 100 mil val from Silicon Valley, but 10 million at a 75 mil val from Northwell, but that still makes sense because they're going to get me up and running. I can do research with them. I've got access to clinical pathways that pure capital providers can't offer. I'm not sure if the market is perfect enough for that to play out, but you're definitely bringing something to the table. And that's always the cliche about raising money. It's more than the check. It's how can this investor help me grow my business?
100%. And we share notes because I think we apply the same rigor for a lot of the same metrics, as you said. But what are we looking for and what do we add that the VC can't? It's really, is this product going to be able to be used in the real world? And we're the first step into that world for many of these companies. And so if we can show that there can be an integration, an adoption, that to me is just as important as the TAM or the IRR. Without it, they won't be successful. But we also leverage our clinical experts a lot to look at the clinical evidence. If this is real world data, is it real? Can we replicate it when we implement the solution within our walls? Because you're also taking on a certain amount of risk relative to adopting a solution that's newer out of the gate. In some cases, with the VCs, our thesis might just differ a little bit. We've historically been early stage seed A. We're starting to lean into AB just because of the risk profile and the maturity of the company. We have about 20 companies that are active in our portfolio now. It takes a certain amount of resource to be able to launch those companies concurrently across the system. So we're very mindful. So as we're looking at the portfolio, perhaps we'll go into a little bit more of a developed, they need a little bit less of our time and they can come out of the gate strong because they've done their early work, maybe with one of the peer organizations that we work with. And the same thing for device. It folds over into neurotech, but we're much more likely to put in for a 501k rather than a pre-market approval. It's just the return horizon's far too long. So for VCs, that may be appropriate. For our environment, it's just probably not going to work based on the type of partnership that we want. And lastly, I think we're going to prove out the economic story. The company says it can bring some kind of ROI, some kind of outcomes measurement improvement. This is where the value is going to show up. And so we need to prove out that concept. And it only works, again, if we can integrate it into workflow. If a solution doesn't integrate with workflow, no matter how good it is, it's just dead on arrival.
Yeah. No, proof of that economic concept is so important. Look, Richard, let's shift gears into neurotech specifically.
Sure.
Podcast called The Business of Neurotech, so it shouldn't come as a too much of a surprise. But yeah, look, I mean, it eases in. I'm interested in your perspective because, you are literally getting 2,000 plus deals across your desk. You must see a whole range of different verticals within the medtech, within health space. How do you kind of view neurotech as a macro sector and kind of what share of your deal volume that comes in? I'm interested, is neurotech? I kind of live in the world, so it seems so large and all encompassing, but you can give a sense of how big it is kind of in terms of share of pie of what you see.
Yeah, it's interesting because when we look at the space and we see where all the money seems to be going, and I think you had your guest Naveen Rao speak about the fact that $4.8 billion market, half of it's going into BCI.
Yeah,
that flow of the market doesn't usually affect where we're going to put our money. So in terms of volume, a smaller proportion of the deals that we see are in neurotech. But they tend to be require a lot more rigor. They're much more complicated, and I think the problems they're trying to solve. So we have to do the research to make sure that at the end of the day, the workflows they're falling into are far more complicated. The problems they're solving for are much more sophisticated than some other solutions which are on the business side, which we get in abundance. So it's easy to fix revenue cycle. Fix neurosurgery, we need to have a couple of conversations around that. That's a little bit more complicated. I would say that in terms of our portfolio, though, and the investments that we've made, we have made some pretty significant investments in the neurotech space for a couple of reasons. One, it's solving a really big problem. When you think of the brain, it's mission control. It's how everything else works. And so it's really very important that there's so much that can be done in the space. And the initial use case for some of these solutions are just the beginning of a very big journey for them. So when it scales and the potential impact of these is very compelling for us, but we want to make sure it's solving the problem that it says it can solve for. So we've invested in companies that have a brain-body interface, a brain-computer interface, one that has the potential to carry over to diagnostic and therapeutic. And so the other driver of this, though, Adam, is that we have such magnificent leaders in the neurosciences. So in neurology and neurosurgery, there's a genuine curiosity, but looking in this space, in this venture space, is something that they all have a very strong interest in. And we spend a lot of time, they'll bring us a lot of the solutions and they'll tell us in a very honest way, this is something that could be cutting edge, but they still haven't solved for XYZ. It could be a navigation problem that needs to be completely fixed before it would be widely adopted by other neurosurgeons. So what do? We'll have, sometimes we'll invest if we think it's the right bet at the time, but sometimes we'll sit it out to say we're going to really wait to see because there's 4 other companies trying to solve this problem at exactly the same reason. It's a race to the end. And again, we have limited uses of capital and limited capacity to bring them into the system and back them with our partnership. That sometimes we'll sit out on those until they're a little bit more sophisticated.
Got it. So few of your deals are either in or around adjacent to neurotech. So Cognixion specifically is bang in the zone. Yes. I think you backed the seed round there. So it'd be interesting just to unpack a bit about your thinking, why you backed it, and also how it's going today as well.
Yeah, it's very interesting because the company we first invested in is not the company that we see sitting before us, which is exciting because it's evolving in a very interesting way. But the most, first out of the gate, without even looking at the evidence, clinical evidence, or looking at the business case, there is a true unmet need here that is incredibly human. So we invested in the company because it's restoring what we think is one of the most human things there is, which is the ability to be heard and to be understood. And it far surpasses anything that's available in the market today. And so, and it can help, hundreds of thousands of people who've had stroke or cerebral palsy or ALS. So we're very excited about the way that the company has developed a platform that can take all the neural signals and really help translate them into something that's, in communication. And so what we saw that in this, it's a non-invasive, obviously brain interface, but the development of the platform has been really outstanding and it's been really very interesting. So it's more than just the headset or that we're putting on. As it's decoding the signals, it's actually providing researchers really a common application platform to build on. So this can cross many, many different devices as it goes forward. So Cognixion, although it started out in a relatively myopic use case, which is good, it's now evolved where new neural devices could plug into any Cognixion, the Cognixion platform, rather than having every single device reinvent its own app. So we're very excited about the pivot that took. It just broadened the aperture and the ability to look at the company more broadly and for it to be a more attractive investment opportunity.
Yeah. What year did you do the Cognixion deal, Richard?
Oh, my goodness. It's got to be about 4 years. Don't quote me. I'll have to go back and
that's
check.
Okay.
But,
now, the reason I ask, it's a bit like in 2022, people started adding .ai or AI to, people jumped on that. Yes. And right now, I'm seeing the most amazing things described as BCI because people see the wall of capital coming in, the Musk PR effect from Neuralink, and just, the promise of the tech. Let's call it as it is. 8 billion brains. This can... the problems of the brain and the potential of the brain. So I get it. But did you and do you consider Cognixion a BCI play?
Yes and no. So because we feel like we're at an inflection point in neurotechnology. So, for years we invested in robotics, genomics, diagnostics, wearables. We had AI, machine learning, and better sensors. And I think the real attraction around BCI was what it aspired to be or promised to be, but also I think it was being rewarded for giving the best fidelity on the signal, and then the highest chance of success relative to trying to fix a problem. And so that in itself is important. But I think when you start to look more broadly at the space, and although BCI is always, it's going to be important and there's a lot of money being poured into it, not every solution is going to require brain surgery.
Sure.
Patients don't buy sensors. They're going to buy outcomes. They want to figure out what's going to be best in their hands. And that can either be a device that's obviously a non-invasive device, or it could be just a direct go-to-market commercial device. And so we're finding with Cognixion, their strategy is to be the non-invasive front end. So a wearable BCI with an open app, the ecosystem, it lets healthcare developers develop those types of things, is more appealing to us right now. It's more usable. It has a direct clinical application. We get direct results back from the patients. And so that's really more attractive to us as a healthcare investor, just because we need to have that actual application and to start to see those results. And that's what's more compelling for us to partner with those companies today, maybe
Sure.
more so than the wide variety of other invasive BCI.
It's a fascinating answer, Richard, because again, to the headline reader, there's, pick a number, 10, 12, 15, 20 quite serious BCI players now. And you look at the US, you look at China as well. Every couple of weeks, I seem to read about someone's raised 100 million, 200 million, in a seed round. There is a lot of capital coming in. But when you dive even just one level deeper, the kind of continuum of invasiveness is very different. So you got the sort of Neuralinks and paradromics very much penetrating the brain. And then you've got players putting, I guess, devices on the surface of the brain. And then you can go above the brain, but above the skull. And then to your point, completely non-invasive outside of the brain. Think of what Kernel are doing and other neuromodulation, but even in BCI, it sounds like, for the most serious and severe problems you're managing, yes, someone may be willing to have something drilled into their brain, but there's a share of the market where, sure, there's something we're trying to do, but at scale, people, clearly that's, to say the least, a friction point, a major surgery to put something in the brain. And your play is the mass market will be a non-invasive something. We
think so. And, platforms like Cognixion are going to be able to sit on top of invasive and non-invasive solutions. So there's that promise that we can offer the translation. But yes, because invasive BCI, it may have much better efficacy as we go forward, TBD. The fact that money's flowing in and sometimes valuations are high, it doesn't impact us. In fact, sometimes health systems are risk averse in relative terms, and they're built to make sure they can take care of people. They're not built like venture studios. So the very fact that concept is still being developed and playing out and may take another decade before it's really perfected. So we, I know it's a common expression, we move at the speed of trust. So we don't invest in anything our physicians don't want to use, but they won't want to use something that they don't understand and they don't trust. And that includes everything from device, whether it's non-invasive or invasive, but also AI. And so if it's, everything has AI in it, as you said, today. In fact, sometimes I think we have a whole host of legacy titles that are going to be retired that have AI in the title, because who owns AI? I'm like, who owns the internet? We don't know. It's everybody. It's everybody's job. So I think that at the end of the day, we're looking for a couple of very clear bars to be met. And at the risk of just being, repetitive, it really does have to nail the evidence and nail workflow and the economics and the risk. And it has to really be integratable. And so invasive BCI is not quite there for us yet. So we're very curious, and we are sitting on the sidelines watching very closely and reading all the papers. And when it's appropriate, I think we'll probably come into that.
Great. Final question on sort of neurotech. So Cognixion, a very interesting play. I wish we could spend more of the episode on that. But beyond Cognixion, anything else in your current portfolio, or maybe things you're starting to look at within the neurotech umbrella?
Yes.
focused ultrasound, TMS, large brain models, EEG caps, anything else that interests you?
Yeah, it's interesting because everything you just said is something we do within the service lines. And so we have launched, invested in a couple of other different companies. A company called Nuvotion actually came out of our Feinstein Research Institutes, and it's a neurotech company. It's developed an AI-guided brain-body interface for neurorehabilitation. So it focuses on the restoration of motor function following strokes or spinal cord injury. It just received its FDA approval. They're in the process of early stage going to market right now. And so we see the implication for that, not only because of its impact directly on the ability to change patients' lives, but again, take it back to the lens that we're going to have to look at. What is the impact on physical therapy, occupational therapy, the ability to drive other types of ROI out of this? Because it doesn't take that many devices to be sold within those facilities in order for this to be used, because it relies also on a patch that can be used, or disposable patch that then you can plug the device into. But it has such incredible outcomes, and we've shared it with a number of other health system partners. But another company that's equally interesting because it crosses over in a couple of different facets. It's Spark Biomedical, and they have a product called OwnBody. So it's direct to consumer. It's a wellness device. It uses neurostimulation of the vagus nerve. And really, in the first use case, it's really just to reduce menstrual bleeding and alleviate many of the symptoms that go with that. And it's the first wearable device that can help control bleeding that is hormone free. And it provides relief, almost immediately when it's used. But the interesting part about that is, too, part of the company patent portfolio was based on IP that originated out of Feinstein, out of Northwell Research Institutes, and Dr. Kevin Tracy. So it's really an intersection of bioelectronic medicine and where neurotech lives. It's direct to consumer. And interesting, and even in the first use case, working at menstrual bleeding, they've found anecdotally that it had an impact on depression, that it looked to have an impact. It looked to have an impact on energy levels. So now there's a range of clinical trials that are underway to prove out those use cases as well and make it more expansive in the market. But those are just the things that are so exciting to us because, Dr. Tracy has dedicated a majority of his career in this field. He's a pioneer in this field. Being able to see and watch that over 2 decades now actually translate into application. There's a company also that we have an interest in, SetPoint Medical. And again, Dr. Tracy's IP relative to helping that patent portfolio as well. And so that's using stimulation of the vagus nerve to reduce arthritis. And very interesting to see, and for patients to have a medication-free modality to be able to get better and have measurable results. Very exciting. So it's rare you get to see something from its genesis into the market. There's such a long pathway, but fortunately, we've all been around long enough. But the tech has changed so dramatically in the last several years too. It's changing the landscape. But those are some of the companies I think that we found incredibly compelling, and we're just really excited that they're out going to market right now.
Very, very interesting, Richard. Fascinating. And I'm sure the listeners as well, once you get to sort of the clinical application and the deeper meaning, purpose, vision, values that we're driving by working in this space, similar like Omnition, when we talk about patient stories and lives touched, it's like, oh, that's why we go through all of the other shenanigans and hassle to drive change, because it's such an exciting sector, but such a meaningful sector as well. It's great to hear those stories.
Yeah, absolutely. I mean, it really does. The team was out looking at Nuvotion today. We have some new members of the team, and they called me on their way back, and they just were actually, truly just, touched. Being able to see someone raise a glass of water to their mouth for the first time, being able to hold the hand of a loved one that they haven't been able to. Yeah, those are things that are just incredibly powerful. And then, we'll come back and I'll say, you have to just make sure everything's in the investment memo so we can continue to make this company successful.
Yeah. In terms of the value add that an investor like Northwell can bring. I'm sure there's research, there's data, there's obviously access to clinical thought leaders, KOLs. Do you assist your investees with the FDA regulatory and even the reimbursement side of what they're doing?
Directly, no.
Okay.
So it's actually one of what we look at as the pathway that if we can provide any assistance. So what goes into their pre-sub or what will go into their application to the FDA, if we can be of help in preparing that or getting the requisite data or outcomes that they're going to need. Many times, we can serve as an early partner in clinical trial, but if we're investing, as we get later stage or to a validation points, we're not going to do just for perceived conflict of interest. We're not going to participate in those trials. But, and whether there's or not a CPT code, early on, we have enough experience just trying to explain to them that process and what needs to be done, because it can often take years for that to follow. And it's part of the investment thesis. Is this service reimbursable? So if I take it in, am I going to be able to drive revenue from it? Is it replacing something else that already drives revenue? What is in the best interest of the patient? So when we look at FDA or the reimbursement models, the companies are primarily responsible for that, and we'll provide them all the backup and the background support that we can.
Yeah. So I want to be respectful of your time, Richard, but just final 2 or 3 questions. I'm interested, I'm sure the audience would be interested. Again, we quite myopic openly about neurotech only in terms of our lens and the market we're looking at. You are looking at a broader canvas of medtech, health tech, workflow tools. Is there anything I'm just interested in your sort of high level view that neurotech does differently to other fields of med and medtech? Does it come across as more, long-term and speculative than other areas of med? Or is it just broadly similar? Or whether it's the heart, the liver, the knee,
right?
We're all kind of battling similar levels of uncertainty and risk-return trade-offs. Is there anything distinct about neurotech that you see?
Yeah, we don't look at it as a separate vertical. What makes it distinct and special for us is the partnership that we have with our clinical and business leaders in the specialties, and who are actually going to help support our investment and really the journey of that kind of a technology. But no, when we are looking across the spectrum of everything and that's why it's very difficult for us, because we see so many different wonderful opportunities to invest. But looking at neurotech, and the broader applications and the potential for it is very, very encouraging. So when we're looking at its ability to help address issues with depression, when we're looking at it for other applications that are not directly related to what it was solved for, that's what's compelling. But also, I think medtech is leading the way in the intersection of AI. So we'll have the focus on the device itself, and then we're looking at an agentic framework that's being put in most often to take those signals and have action and translate. That's going to be incredibly important, and it's going to change the way that care is delivered. But then looking at that, the decision, I think, is going to be when we look across our whole portfolio and across all of the service lines, what's still unknown and what we still need to explore as an organization, especially with these devices. And then you're going to have these devices purchased by big device manufacturers with whom we have wonderful relationships with. But who's going to own the horizontal agent platform? Yeah. And that's going to be a huge impact on margin for the medical device providers today. But it's also within the purview of the health systems if they want to make that investment and really go down that path, which I don't know if it's early days for almost everybody in that. And some health systems may be a little further along and embarking upon that, because that's going to have to link into your, most people use Epic medical record. They're going to have to look longitudinally. How does this all fit in? But that platform itself can cross all service lines. And that's what's compelling and very interesting, that medtech in and of itself is interesting and helpful, but it's driving the conversation because it's the intersection it has with AI right now. And it's probably the most pressing related to the potential to develop that kind of agentic platform that could have applications across the spectrum. So it's interesting. So it's a yes and a no answer to the question.
Yeah. So you, beyond clinical, you would look at pure, call it workflow efficiency, productivity enhancement tools?
Absolutely.
Right.
Which are easier to put in. The stories better. One of the companies that we helped form with Aegis ascertained its workflow automation. We're using it now for prior auth, and it's an important use case, but it's taken 150 clicks down to, a dozen clicks for the end users, and automated many of the tasks. So what does that mean? Just in this one use case, it just means we can do more. We can scale the ability for those same people to be able to help serve more patients or spend more time with the families as they're looking to, place a loved one. So yes, the workflow automations, particularly in revenue cycle, all the areas that I think everybody else is probably looking to put them in. They're in relative terms lower risk, but I think the return on the investment, the one thing we haven't really cracked the code, we're no longer looking at agents as replacing just people. You're looking at differently at a SaaS model, in terms of just licenses. So all of that starts to go away as we're looking at agentic framework. So as we go down that path, the agents are being very readily deployed across the organization in a number of different use cases for business operations.
Great. Final question, Richard. If any early stage budding entrepreneurs in neurotech, or maybe you've just raised a seed round, would you have any counsel about when it's best to target, let's just call it the traditional Silicon Valley VC, and when it makes sense to approach, a strategic hospital fund like yourself?
Yeah. I think if they're early in their journey, I think sometimes we can take a little bit of the sting out from what the VCs are going to look for. They might want to see a little bit more traction from the company just in terms of proof of concept, or that they have the sponsorship of a large health system. That can make a huge difference. So we may see it a little earlier, or we may see it at the same time. That said, if we do our job together, if the product works and we're able to implement it, we are really setting the company up then to be positioned for more significant investment for the larger rounds in order that can be used to scale by the VC. So it's a timing issue, and sometimes we're right aligned, and sometimes we're just a little bit out of sync on this and trying to do our respective roles with trying to bring those things forward.
Yep. Look, there's high net worth investors, there's family offices, there's VC, there's private equity, there's hospital funds. It's all about finding the right fit at the right time, and ultimately just the operating synergy with the team you meet. Sometimes it's just kind of serendipitous. It's like, Northwell is the right fit right now, but at other stages, maybe a more traditional VC is. But I think it's definitely something anyone listening should at least consider in their funding mix for sure.
Absolutely. And a new founder has to understand when they're coming in, the areas that I mentioned, they have to just make a CEO happy or make a CIO happy, a CFO, and the IT team. So if they can have everybody go to bed at night with everything in their respective worlds working, that's going to get them over the hurdle and in the door. And so for an entrepreneur that's doing that, and we view them, honestly, I didn't allude to it earlier, but the relationship that we have with the founder and the CEO is so pivotal. It's so important. It's why companies have succeeded or failed, just regardless of the strength of the product. So we're looking at that as well. And so are the VCs. So we look at it as a great partnership. And we've been very lucky. We've had some amazing leaders who've come out and developed these solutions. We're constantly inspired by them. So
agreed.
It's an exciting time.
There's some quite brilliant people trying to crack the code of that organ inside our head that still remains so misunderstood, but it feels like we're making progress. So, Richard, thank you so much for coming on. It's been really fascinating to get the view of an investor inside a health system. Thanks for talking about Northwell and your views on neurotech. Before I let you go, where do you want to send people that may want to learn about maybe your writings online or just the work Northwell are doing if they want to look into it further?
The easiest place, we're redoing our webpage right now. So the best place is to go to LinkedIn and send us a message, and we will absolutely be able to connect back with you.
Wonderful. Richard, thank you so much for coming on the Business of Neurotech podcast.
It's my pleasure. Thanks so much for having me.
Thanks for listening to the show. For more information on the podcast, individual show notes, and all the links about where you can find the show, please visit businessofneurotech.com. We look forward to seeing you on a future episode.